All right, the countdown. There we are. Okay, so the recording has started, and it is June 13th. I'm Tim Quast with Market Structure Edge, and along with me today is Brian Wilson and our market strategist. So he and I are going to tag team like we like to do, hand the baton back and forth. And since I went first last time, Brian will kick it off this time. So Brian Wilson, over to you.
Perfect. Thank you. Good to see everyone. Welcome to those who might be with us for the first time. We'll touch on a variety of subjects today, but as Tim mentioned, as we get going, if you do have any questions, feel free to holler in the chat room. I'll go ahead and share my screen and take us over to my Edge portfolio. So what I wanted to start with is actually just a little bit of a question. So when we look at broad market sentiment, it's a measurement of demand and supply in the marketplace, and you'll hear us talk from time to time about divergence or convergence. Divergence is what we have right now. It's when demand is moving higher. You can see the green right here. So demand is up, supply is down. That's generally a constructive environment for gains. Now, it's just the opposite if demand is falling and supply is increasing, the market usually moves down. So, with that backdrop, why did the market do this about a week ago? I was actually out of the office. And the market went up when demand was moving down, and maybe Tim, that's just an indicator that I should be out of the office all the time. I'm not sure. Um, but if we
Clearly,
look at
you
this
need to be
setup,
in the office.
I don't know, right? But it was strange, right? You're looking at falling demand, you're looking at high short volumes. Why is the market rallying? And there can be various reasons. Sometimes we can't see everything that's going on. If we get movement in the derivatives market, sometimes those things will manifest at a later point in time. But one area that I did notice as I was trying to unpack that question had to do with our big tech portfolio. So if you look at big tech, it was going down along with everything else. But look at the time frame here. We're moving into last week, and I think we got as low as 5.5. So we never got any lower than 5.5. And during that whole stretch, short volumes were low. And recognize that big tech is such an important part of the market. It just is. As big tech moves, the market moves, and we never had sentiment get down below 5. And in fact, if you look at what has been happening this last week, let me just update this. This is just the Spiders sector tracker. So up 1.25%. There's a lot of red, actually. There's a number of sectors that are red. Look at what's dominating: tech. So once again, I think that kind of saved the day last week. Is just tech is weighted so highly that it helped to lift the other S&P 500 components, even though we were in a backdrop that perhaps the market should have performed, a little bit worse than it did. That was the first point I wanted to share today. The next point goes along with what I mentioned in today's market desk note. And sorry, that note was a little bit weird because of systems issues this morning. But one point that I was making was taking advantage of gifts. Once in a while, the market will present us with gifts, and we just say thank you very much, and we we gladly take them. A couple of days ago, Tim did a very good job of unpacking, what the market backdrop was. It was a backdrop that had divergence. That was broad market sentiment or demand moving higher and short volumes moving lower. Now the market was down pre-open. What do you do with that gift? Well, you say thank you, and you buy it. Now there's different ways that you can do that, and perhaps for some of you, this might be a tool that you want to add to your tool belt. Maybe at this time, all that you're doing is trading the daily trading ideas. Well, that's wonderful. That's fantastic. You can you can add a few things, to those tools. And here's one of the tools that you might want to consider adding. Look at what happened here. Market structure sentiment had moved below the green line. That's always a buying opportunity. You say, thank you very much, and you go long the market. How can you do that? Well, the easy way is just doing SPY. That's a simple way of doing it. Here's a couple of other ways that you can do that. If you want to be leveraged, SPUU, that's an S&P 500 two times leverage. SPXL, that's a three times leverage. I usually go with the SPXL just because you don't get these opportunities very often, and I want to put more bang behind my dollars and make a little bit more money, with those opportunities. So, just a thought here that if you're not doing it right now, to consider adding those directional trading tools to your tool belt. You can treat them just like you do the daily trading ideas. If you're not comfortable holding them for periods of time, just set those strict stop losses. And I know, Barry, you trade in the options markets occasionally with some of those instruments, and that's also another way that you can add even more leverage, if so inclined. One other thought for me today, and then Tim will kind of share our, what's ahead path. But my thought for today is sometimes it pays to be patient. And let me show you what I'm talking about. Actually, an example from today's trading. I was looking in our momentum portfolio this morning, and it was Spotify. And I'll show you what was happening here with Spotify. You can see normal intraday volatility 3%, entry low between about 310 and 318. Let me pull up what that looked like, if I can get to it. It's the bane of our existence. Sometime I'll have to stop sharing my screen for a second so I can get there. All right. Go back to sharing. The share button is sometimes right where you need to be. So the market was lower this morning. It just started off with a little bit of a weaker market. I was looking at Dutch Bros, which, by the way, if you've never been there, very, very popular. Both of my daughters just thoroughly enjoy it. Might be a good opportunity for someone to open up a new Dutch Bros in your respective state. But I jumped the gun just a little bit this morning. It's not that it wasn't within our parameters, it was. But just recognize sometimes that with momentum names, they're momentum for a reason. They're going to be moving higher. And if they start to come under pressure, sometimes you will see them give up most of their volatility. So what I did is I think I bought it like right in here somewhere around 39, something like that. And I got stopped out because it kept moving lower. And my advice sometimes with these momentum names, if you're looking at them a little bit later in the morning, if they're already weak, take a peek at what the normal intraday volatility is. And that can be a good entry point. They often don't get much worse than what you'll see here. So you're looking at a name, look to pick it up, down about 3%. I did the same with that Spotify. I did the same with with Dutch Bros. Look to get that name down about 4%. It's just a consideration. If you start to see momentum names come under pressure, go ahead, let them come under pressure. Just step aside, let them do their thing, and then pick them up when they're fully down their volatility. You'll stand a better chance of not getting stopped out on those trades. So that was the items. Yeah, Steve, go ahead.
Do you worry about your wash sales? Because I was in Dutch Brothers using our same strategy that I've been using forever since you started doing the daily trading, and had a pretty substantial loss on that one. And so do you look at it like, well, I'll just make it up, and if I don't get to write off all these losses, I don't get to write them off? Or how do you view the wash sales?
For me, it's a great question, Steve. For me, it doesn't apply because I'm trading within my retirement account, and I think Tim is as well. Uh, got the big thumbs up from Barry. But
Yeah, it's
good.
a
How are
it
you
is
trading, Barry, in the in your retirement account doing shorts?
So I've got Fidelity, and I can do cash secured puts, and of course calls. So to what Brian says, it's kind of a license to steal. I'll write in the money puts, get assigned. Then I'll write calls, get assigned, and I use puts and calls to get into stock and have stock assigned.
Mhm.
And that way I don't have to worry about anything. It's just there is no wash rule. There are no taxes. It's just a license to steal, and you can usually juice your returns a little bit better than just playing the stock itself.
Okay. I was wondering how you were able to do that in your retirement account.
Infidelity, yeah, you can do it with Fidelity. I don't know about others, but Fidelity lets me do it.
Okay. What
And
about you, Brian?
I can do options in my Schwab account as well.
But you're doing it in your all of you people are doing this in your retirement accounts?
I am.
Yeah,
Brian
I
is,
am.
I am.
Barry
Yes.
is. Yeah, but it's
Yeah.
a great. It's a. You've raised an issue that we need to do some work and research on, because it clearly, if you're just trading a normal account, I've got one of those too. That it could become an issue. There, I don't know what the answer is to that without doing some more homework on it. But I will endeavor to do that. Clearly it's an issue. I mean, it's an issue
Yeah.
at times for high frequency traders too. Yeah.
Mhm.
Yeah.
I've got the Schwab account also, and what I'm doing is I'm putting them into my watch list each morning. I'm looking at that for the past 30 days of any gains and losses. And boy, it really, it knocks it down pretty good.
Mhm,
Mm-hmm.
mhm.
Yep. Yeah.
And I'm sure you've
But
noticed, Steve, a lot of those names will keep popping up over and over again, especially in the
Yes,
momentum names. Yeah.
yes.
Yep.
But Steve, Schwab should also make the adjustment for you on the wash rule. So they should actually, once you get into the next day, they should post whether you're positive or negative in a stock.
Yeah, they do. That's what I'm looking at as I go through to see where I am on each of the names. And it seems like for me anyway, I make money on certain names and I lose money on other names. But they keep repeating over and over again as stocks in our watch list on the daily trades. So I really have to be careful. Otherwise, I'm losing any tax write-offs at all on certain stocks.
Gotcha.
I'll ask Dennis Dick about this, because he's trading the same names all the time, and clearly it's somehow he's addressed this concern, and I don't know what it is, but if anybody will have an answer for us, it's him.
Boy, I'd sure like to know if you could share that through an email or however,
Okay.
because it really slows down my whole process.
Yeah. Yep.
Yeah.
Thanks, guys.
Yeah. Well, it wasn't much help, but we'll see what we could do, Steve.
All right. Thank you.
And Tim, I'll hand it over to you. That was the points I wanted to cover, and we can kind of share the road ahead.
Let's do that, and then I'll take just a few moments. I'll try to keep this. There's self-interest. I've got close to a 1:00 hard stop, so I am forced to be efficient here. Let's see. Oh yeah, Pam, I keep letting you in, and you keep getting knocked out again. Think you're there. Think you're back in. So let's talk quickly about what's ahead. Here, I'll kick it off, and Brian, feel free to share. Okay, good. No, that's fine, Pam. Let's see. I'm going to share my screen, and I would point to, well, there are two things. And it dovetails with Brian's comments about how, look, I was a little bit surprised too. I mean, I expected that the market it proved to be a hard market to short. You had to very quickly take your short gains, because as soon as demand and supply began diverging again, basically with right at the month-end transition, the decline stopped. And I've thought that we would get more than this. This pretty big divergence here, that's unusual. It's not wildly unusual, but I would have thought we would have had a bigger decline, and we might. What you may get out of something like this is a weak top. I'm not saying that's going to happen, but it could. And then weaker tops tend to precede steeper declines. Once again, I don't know what's going to happen, but I thought we would get more. I do think it's interesting that if you go look at the amount of days that we tend to run with declining supply before it bottoms and reverses, we are exactly on it. It runs 5 to 7 days. Each of these times was 7 days, and that's where we are today. It's not like I'm counting days per se. It's just a central tendency that these cycles tend to run just like that. So then you look ahead and you say, well, what's coming? If we have bottoming supply that might rise and demand that's rising, but it's not super strong. You can't look at this and call it a momentum market. There are 11 choices, 8 that make the cut in the portfolio today. So you look ahead and you say, well, what's coming down the pike that we should be aware of? Well, here's where we are, the 13th. Tomorrow, that diamond, the gray diamond, is the first phase of the Russell rebalances. It's not published data. You'd have to be a FTSE Russell customer, but you will get the first cut of the annual Russell rebalances. Is that some kind of potential liquidity event? I don't expect a lot from it. We track it. We tell public companies about it because it has a big effect on small caps in particular. But then look at the next week. So the 18th through the 21st here, we got one clean day. And then the 18th is VIX expirations. Market is closed on the 19th. And then we have June expirations, second tranche of the Russell rebalances. If the market were to run out of steam right there and have rising supply, look, the conditions could be challenging. My point out of this looking ahead is beware that the cycle could be short. I bought a bunch of stuff today, and I'll talk about that last here. I've got just one more thing to mention. Always about entries and exits, always about Steve Hicks, these concerns about getting stopped out and how to make sure that you're maximizing the probabilities of producing returns. It's been a good week for me doing that. I've been stopped out of very little stuff, and the limits have worked well. Brian, you want to add to the look ahead?
Yeah. I'll share my screen if just for one item here, Tim.
Yeah.
And what I'll show you is like the path ahead when I look at it seems somewhat clean, obviously in the context of what Tim just mentioned. Next Friday is also S&P quarterly index rebalances. That can also have an impact on the market.
And quad Richie. I mean, it's kind of a big deal. Yeah. June is not the heaviest month for these things, but it's important.
Exactly. So what I wrote down when I was looking at this, I wrote down higher but messy. We're in the middle of divergence right now. So, that demand is up, supply is down. That's fantastic. But, once again, we're really being carried by tech right now. And look at what's happening with tech. Demand is moving higher, but so are short volumes at the same time. Question is,
you might have to scroll that. I'm not seeing it, Brian, on your screen. There you go. Yeah. Okay. Keep going.
So as I was looking at this, and let me enlarge this.
There we go.
You're looking at, increasing demand, but look at short volumes just skyrocketing higher. That's fine for now, but what happens if demand slows? If the rest of the market is already okay, but we're relying on tech, and if demand does slow and we're facing high short volumes, that's a recipe for, the market to potentially slow down a little bit. So that's one item that I'm watching. Once again, I think we go higher, but I think it's a messy process as we do so.
Mm-hmm. Yeah. It's going to be interesting. Let's see how that unfolds. Okay, so there's one other thing I'm going to share too. I had did this presentation today for Interactive Brokers. We had over 500 people registered for this event. Not the highest we've had, but that's a pretty good number. And I just want to hit a couple of high points because I think it dovetails. Comes back to what the money's doing. Why do these things matter? Why does the calendar matter? A lot of it has to do with what the money is doing. We talk about this a lot for public companies, that there are two things that investors are effectively buying. They buy alpha or they buy beta. Alpha is, if we all were in the same room, exposed to the very same stuff, who would outperform everybody else? That's alpha. Risk adjusted return. You're trying to beat the market. The thing is, here's the money that is trying to generate alpha. This is from the Investment Company Institute. It's a graph we've used. They publish it every year. It's 250 pages of great data on the regulated market, the retirement accounts. But they track the trends, and it's really good. So this is stock picking. Stock picking has been in free fall for 15 years, losing, really, if you put together equities and fixed income, $500 billion a year to BlackRock, Vanguard, State Street, the geode arm of Fidelity, which is their quantitative arm. I could go on and on. Across the top 25, almost all of them are asset allocators. And so, and they're losing that money to beta. Money that buys beta is buying the herd, not the outlier. Most of the alpha in the market in 2024 is one stock, NVIDIA. Most of the market isn't delivering alpha. Most stock pickers do not deliver alpha. So that's then why these benchmarks are very important. Rebalances occur, and this money rebalances. This money will use some substitutes in the form of options and futures to true up tracking, that they're going to reset at options expirations. They're the ones with the money. That's why we pay attention to those things. Everything we do, it goes back to the data. And that is important to understand. And then understand how the stock market works. This is the stock market. We tend to think of it as, it's this place down at the corner of Wall and Broad in downtown New York. And I've been to the floor many times, the NYSE floor, been to the NASDAQ's market center, market site as well. And because we buy data from them. This is the stock market. It's not a place. All the servers are in New Jersey, in Secaucus, Carteret, and Mahwah. And if you look at the fragmentation in the market, just look at this. The NYSE's 5 platforms, 1, 2, 3, 4, 5, not 1, 5, are 20% of the market, 21%. In fact, only the main floor is 10%. The others are just fragments. The NASDAQ is 16% across 3 exchange platforms. And the Q is the biggest one. It's actually the largest by market share, about 15%. Then you got the SIBA with 12 and the independents. And all of the stock markets, the displayed markets, are 54% of volume. They're only half of it. The other half down here on what's called the Trade Reporting Facility, TRF, run by FINRA, that's all the stuff matching up in the 30. Right now, there are exactly 30 alternative trading systems. There are exchanges and ATSs. That is the stock market. They're all connected. So that fragments all the prices and liquidity. That's why the prices are changing all the time. It's why volatility is so important. And you can't outcompete Citadel. If you look at the speed at which things happen today, Optiver said this 7 years ago. Optiver's a big Dutch high-frequency trader. So they said a good trade is 2.5 microseconds. That's the time it takes for light to travel from the top of the Burj Khalifa to the ground. Tallest building in the world. In fact, today, you could execute a trade in 10 nanoseconds, time that it takes light to travel from a lectern to the first row of the audience. So that's what you're up against. That prices are set by that. That's why technicals struggle to be reliable. And we have to lengthen our time frame because all these people have a time frame of a day or less. That's the good news. That's why we say our time frame is a day or more. We don't want to be competing with this, and we want to know where the demand supply imbalances are. So those are things to me that are very important to know before you think about your entries and exits. And so today, I bought 5 things. I got stopped out of 2. I got stopped out of Spotify. I set a very narrow, Spotify has a pretty big spread, so I take fewer chances with something like that. And I got stopped out of a firm, but they were my smallest positions. I just had a little bit. So I've got Palantir, Dutch Brothers, and something else. It'll come to me when I look at this. But here's what I want to show you: that if you look at is volatility reliable? It dovetails with what Brian said. It's very reliable in telling us the range that machines are likely to move something. It's not perfect. Again, the odds are 68-32. Mine are a little worse than that today at 60-40, but it's pretty close. It's pretty close. So Dutch Brothers moves 4.3%. This is what it is. I bought Legend Biotech. I don't love it because it's an ADR, and ADRs have more arbitrage because they're trading in another market. There's an American depository receipt that represents something else somewhere else. Well, that's necessarily going to introduce a little more volatility, but nonetheless, you could trade them pretty effectively. So I'm always looking at that same thing that Brian mentioned. What's the total volatility? Then, if you're going to the daily trading ideas and looking at the entries and exits, it's pretty interesting to just look those things up. If I look at spot, I bought it in here, but I had I only had 0.5% stop on it, and I got stopped out. But you could have made your money. You could have made your 2%. It dropped down to, call it 301, and it went to over 309. There's your 2%. So you could do that. You could look at just about any of these, and here's the point: 3.2%. There's the volatility. Look at Dutch Brothers, about 4%. That's the volatility. Palantir, you could look at the volatility. This, to me, was a smorgasbord today. There were only 2 things that moved that you didn't have an entry point: NVIDIA and HIMS and hers. Everything else had a pretty good entry point. I actually bought Palantir live in the Interactive Brokers webinar to demonstrate, look, I'll trust the data. I don't care what the broad measures are doing. Look, the NASDAQ's now up 60 points. And we know that the supply-demand balance is positive. There may be some bets that sort out on the inflation data, but these principles of using volatility are very reliable so long as you understand what the broad sentiment is doing. It's diverging, and the calendar next week is pretty messy, but I know I've got tomorrow and I got Monday where I could probably have a good chance to produce my 1, 2, or a little bit more percent return. And if you can do that, that's like issuing a credit card. Every time somebody uses it, you get paid. It's not perfect. Life interrupts our routines, but it is statistically very effective. What we got to figure out is this wash sales situation for you, Steve. But those are my thoughts. That just on days like today, where you could look at almost everything, you have entry points. Don't be afraid. Make sure don't set your, like I did with Spotify, 50 basis points down. I didn't care. I didn't have much exposure. Be willing to take a 1% risk. And if you are, and you bought most of the volatility, the probability you produce a return is statistically extremely high. But it's not going to happen in 30 minutes. We want it to take, sometimes it happens right away, but 1 to 5 days. That's what we're after. Okay. That's all I have. And the floor is open for questions, comments, words of wisdom. We're always in the market for those. Anything we can answer for anyone. Yeah, Joe, it happened to you. Yeah. It's with this, and what I mean by the spread, Spotify has a spread of at times like 30 cents, right? So you could have that much difference, and so the price can move all of a sudden on you, and just take your stop right out. So I think with a stock like that, you have to have a little wider range. And I don't care. I don't second guess anything I do. Just live with it. I'm perfectly fine with it. I'm happy with the stuff I've got. Joe, it should. It should. It should. Palantir should deliver the goods, and it doesn't happen. It doesn't happen in a predictable fashion. We know there's 4% movement, and it'll go, and then all of a sudden it'll do that. That is how the stock market works. And why does that happen? Why is there points of friction? It's Citadel. I love Virtu. Hudson River Trading, Quant Lab, Infinium, GTS, Tower Research, all these firms who are consuming all the proprietary data and making decisions and moving prices. They do it, it's all automated. And so we have to go with the central tendency, and they do work. What else?
Why didn't you go into HES? Went down below the target, the entry price.
You mean HES? HES?
Yes. Yeah.
Well, so 2 reasons. A, Hess is a customer. So I kind of tend to avoid our customers, Number 2, it's in a deal. It's in this battle which is not going to be decided for a while. But so sometimes statistically, those I'm going to avoid them. But you're right. Is it an opportunity? Of course it is. Yeah.
Insider trading.
I don't have information, but I'm certainly not going to ever. I avoid all appearances of evil, particularly in a big deal like that. XOM and Chevron battling it out. Yeah.
Okay. I was just curious why, because you said it didn't make it to for you to purchase, and I bought it. So.
Well, anyway. You are in a better spot than me. That should work.
It worked.
Good. Anything else? If not, then I'll let you go, and we'll do it again next week.